In the meantime, we're getting more bank earnings this morning. We've already heard from Wells Fargo and Bank of America so far. Citi still to come a little later this morning. Joining us right now to talk about it all is Stephanie Link. She is Hightower Chief Investment Strategist, also a CNBC contributor, and she owns, Steph, I think it's definitely Bank of America and Wells Fargo. Those are the financials that you really are focused on?
So let's talk. And Morgan Stanley tomorrow.
And Morgan Stanley tomorrow. So let's talk a little bit about what we've heard this morning. You want to start with Wells Fargo?
Sure. So with Wells Fargo, the net interest income certainly is a little bit disappointing because they missed. But in just digging through the overall details, it was a really solid report, Becky. And I think you want to use any weakness to be buying because the story really gets interesting in 2026 and beyond as the asset cap has been lifted. The company then is going to aggressively invest to grow, and they're going to increase market share. That's the story about Wells Fargo. Now, in terms of the earnings report, solid, as I mentioned. Profits grew 6%, net charge-offs fell. Corporate investment banking grew 14% year over year, up 6% sequentially. Wealth management grew 6%. And ROTCE, that's the profitability metric, rose 15%. And their target of 17 to 18% over the medium term not changed. They bought back $5 billion worth of stock in the quarter. They had a $31 billion program. That's 10% of the market cap. They're going to continue to buy back. So I think this is a solid quarter. The reason it's down is the NII miss. I get it. But the stock's also up 31% in the past year. So
that's
any weakness, I use it as a buying opportunity.
What you're talking about this being the year where the shackles really come off and they can take off, that's been kind of well telegraphed to the street, being up almost 30% even after these declines this morning.
Yes.
Is this your favorite name, or do you think a lot of this has kind of been expected by the street at this point?
This is my favorite name because I think that there's so much more growth ahead of them. You know, they really have had their hands tied behind their back since 2018. That's when the asset cap went in place. So now all of a sudden they can grow. And the numbers I just cited in terms of the quarterly report and the full year numbers, really solid in the face of all that, right? So now just imagine what they can do. And I'm most excited about the profitability improving between now and over the next several years. I think actually the ROTCE at 17-18 probably gets bumped higher as they continue to invest and grow more.
All right, let's talk about Bank of America. I don't know where the stock's trading right now, but it beat on the bottom line. It beat on the top line. The charge-offs were down sequentially. Investment banking better than where they had guided to just a month ago. What do you think of, and that stock actually right now up by about 46 cents.
It should be up much more. And this is by far the best of the big three so far. We'll see what the others do later this week. They beat on net income. The total revenues grew 7%. And then I'm going to say there's the tens, the magical tens, right? It's net interest income grew 10%. Global wealth management grew 10%. Sales and trading grew 10%. These are really good numbers. They all beat. And their average loans grew 8%, and they're saying across every business, average loans grew. So they really did, to me, it was a surprise to the positive side. They really did outperform relative to expectations. And this stock trades at 1.4 times book. That compares to Wells Fargo at 1.8 times. So Wells is a little more expensive. But Bank of America should see a catch-up if they continue to outperform. And the results today very, very encouraging.